Hi there, good morning. Hi there, good morning. My name is Victor Alui, and I'm the head of investment strategy here at Sankore Global Investments. This is your weekly financial markets roundoff. We start off in the US, where it was a tough week for stocks as concerns around the slowdown in the economy and also the Fed's interest rate path continue to weigh on investor sentiments. We saw GDP numbers revised downwards last week. The market ended Friday stronger, though, particularly as the Dow jumped to its record best session this year with a 1.51% rise. The S&P added 0.8%, while the Nasdaq was flat as it shed just 1 basis point as Nvidia and some mega tech stocks took a hit on Friday. The S&P and the Nasdaq snapped a 5-week winning streak as they both shared 0.51 and 1.1% respectively for the week, while the Dow Jones lost 0.98%, making a second straight week of losses. Now, despite the tough week, it was a positive month of May, with the major benchmarks registering their 6th positive month in 7. The Dow added 2.3% for the month. The S&P rose 4.8%, while the Nasdaq added 6.88%, notching its best month since November of last year. Core PCE came out on Friday, and it came pretty much in line with what the market had expected. Month on month, we saw an increase of 0.2%. Year on year, we saw an increase of 2.8%. So this PCE number that came out on Friday really provided a bit of support to the market. That's why we saw the strong closing that we saw on Friday. On the corporate front, really, May marked a record month really for companies announcing share buybacks. A total of 154 companies announced buybacks worth about 201 billion. Apple basically led the way with buybacks worth over 100 billion. Now, this move really is reflective of strong confidence in future earnings for these companies. For the remainder of the week, really, this week is really brimming with some economic data. We'll be looking out for ISM and PMI manufacturing data at the beginning of the week, while labor market data, initial jobless claims, ADP jobs data, and non-farm payrolls will be put out at the end of this week. Now, the expectation around these data would largely determine how the market behaves really for this week. Over in China, a private survey released earlier today showed that manufacturing activity expanded at its fastest pace in 2 years, and this is in contrast to earlier data set that was released by Chinese officials. Really, the Caixin PMI data showed that manufacturing PMI came in at 51.7% in May from 51.4% that we saw in the previous month. Again, this is reflective of the fact that economic activity is looking to pick up in China. And on the back of this, we've seen the IMF revise its growth forecast for 2024 from 4.6% to 5% for China. And in India, stocks hit record highs as exit polls suggest a decisive Modi win for a rare third consecutive term in power. The Nifty 30 index rose 3%, while the S&P BSE Sensex total return index was up 2.6%. These moves are largely reflective of investors' expectations that the Modi administration would focus very heavily on infrastructure developments, and this would certainly deliver very, very strong economic gains to India. Yesterday, OPEC met and agreed to extend output cuts into 2025, and this was largely expected by the market. They also agreed to stretch 2 sets of supply cuts over different periods. So the major producers, Saudi Arabia, Russia, agreed to extend 1.7 million barrels per day of voluntary cuts that were set to expire at the end of this year into 2025, while a smaller group is also extending voluntary cuts totaling 2.2 million barrels per day up until Q3 of 2024. These cuts were set to expire in Q2 of 2024. Now, these decisions were, like I said, largely in line with market expectations. However, they are coming just before the commencement of the summer driving season in the US, and this could lead to tightness in the market and could potentially put an upward price on crude oil. In Nigeria, at the start of the week last week, rates declined essentially on the back of some significant inflows into the system. So we had NDF maturities, we had CBN swap maturities as well. This was, however, short-lived as the liquidity was mopped up via a 500 billion OMO auction, by the CBN. There were also outflows from AMCON and CRR debits as well. The Treasury bill market remained largely tepid, particularly post the OMO auction, with just a lot of cherry picking really across the curve. It was pretty much the same thing that we saw in the bond market. Sentiment was largely subdued. A lot of the activity was basically focused on the belly of the curve, the 2031s, 2033s, and 2034s, obviously because of the yield on those papers. This week, the market basically be looking to the PME auction that's holding on Wednesday to essentially get a sense of, near-term market direction. Also important to point out here that, the Nigerian Labour Congress today commenced its indefinite strike. The hope and the expectation is that sooner rather than later, they will get back to the talking table with the federal government. And the expectation is that in a matter of days, this will be resolved and it will be over. That's pretty much it, for our, weekly financial market roundoff. We hope that you have a very, very productive week ahead. Thank you very much for your time.